A pretty positive day for Asian stocks with investors bullish on Chinese shares, especially in the technology space. Now, all these are helping Chinese stocks onto a sixth day of gains. Now, this morning we had a round of Japanese economic numbers. They were rather subdued and look to be setting up the yen for a weak outlook in the near term. On the downside, you have June's jobless rate numbers coming in at 3.7%. That's a bit worse than the 3.5% that the market was expecting. Retail trade was also down at minus 0.6% instead of the forecasted minus 0.5%, so just a tick below. Retail sales as well rose just 0.4% instead of the 0.8% the market was forecasting. So all that pushing the likelihood of interest rate hikes a bit further on the horizon. There were some bright spots though. The jobs to applicants ratio in June came in at a 22-year high at 1.10 from 1.09 in May. So that indicates a bit of a tighter labor market with some support for wages and possibly pushing up consumer spending. So a bit of hope that things will turn the corner, so we'll have to look out for that. On the news, Japanese yen was initially muted, but starting to see investors position themselves ahead of US data that's coming out later this week. A lot of economic numbers out of the US. We're going to see advanced Q2 GDP numbers, non-farm payrolls for July, the FOMC's rate decision, as well as the Fed's more insight into the Federal Reserve's QE3 tapering pace. All expectations are for another cut of $10 billion in the bond buying program to $25 billion. So all this looking like more upside for the US dollar and more downside risks for the yen.